Aloha, welcome back. We are on chapter 12, and the title of chapter 12 is Reporting and Interpreting the Statement of Cash Flows. And in short, chapter 12 covers Statement of Cash Flows. Statement of Cash Flows is the fourth required financial statement under generally accepted accounting principles. Just a quick review. We have the balance sheet. Balance sheet shows us assets, liabilities, and owner's equity in the form of the accounting equation. Assets are always equal to liabilities plus owner's equity. That's the balance sheet. Then we have the statement of owner's equity. Statement of owner's equity, or for a corporation, would be referred to as a statement of shareholders' equity. Shows the capital account if it's for a sole proprietorship or partnership, or shows the retained earnings account if it's for a corporation, and it shows the account activity from the beginning of the period until the end of the period. Typically would be for a period of a month, could be a period of a quarter, but usually it would be for the whole year from January 1 to December 31. What happened in the either the capital account for a sole proprietorship or the retained earnings account for a corporation. The third financial statement would be the income statement. The income statement shows revenue, expense, and the difference between revenue and expense would be our net income. And finally, the topic of this chapter, the fourth required financial statement, is the statement of cash flows. Statement of cash flows, as the title suggests, shows us where cash came from, and we usually call that, on the statement, we usually call that cash provided. And it also shows us where cash went to, or on the statement it would be referred to as cash used. So cash provided, cash coming in; cash used, cash going out. And other terminology that we would associate with cash on the statement of cash flows would be cash inflows for cash coming in, and cash outflows for cash going out. It's a very important statement. Oftentimes a business can be showing a profit on the income statement, but can be short of cash. And so the cash flow statement shows where your cash is, where your cash has come from, where it's gone. And if your business is short of cash, it can tell you exactly what the problems may be that's resulting in that cash shortage. The statement of cash flows shows a slightly different classification of activities, cash activities. We classify cash inflows and cash outflows on the statement of cash flows into three main categories. And those three categories are operating activities, investing activities, and financing activities. Now, that's new for us in this course, and so it takes a little while to get used to this different classification of activities or transactions. To identify cash transactions by these classification activities, we need to be able to separate the different types of activities based on the accounts that are being analyzed that will show us these transactions or these activities. Now, just saying that is a little vague. It doesn't really tell you much. But when we get into the problem later on, hopefully you'll be able to see it a little clearer. But for now, to find our operating activities, to find our transactions that show us our operating activities for cash flow purposes, we are focusing on current asset accounts. Current asset accounts would be, of course, cash is cash. Cash is a current asset, but we are looking at the other current asset accounts like accounts receivable, inventories, maybe prepaid assets, and so forth. We're also looking at current liability accounts like accounts payable, maybe other accrued liabilities like wages payable, income taxes payable, and so forth. We are also focusing on our revenue and our expense accounts. And hopefully by now you have come to recognize the relationship between different accounts on our different financial statements. For instance, anytime we make a sale for cash, we would debit cash and credit sales. So there's that relationship between cash and sales. Anytime we make a sale on account, we would debit accounts receivable and credit sales. So there's that relationship between those two accounts, accounts receivable and sales. If we're a merchandiser, anytime we buy inventory for cash, we would debit inventory and credit cash. Anytime we buy inventory on credit, we would debit inventory, credit accounts payable. So again, relationships between accounts on our financial statements helps tremendously in working through the statement of cash flows from beginning to end. So again, operating activities shows us, operating activities are presented by reviewing transactions in current assets, current liabilities, revenue, and expense accounts. For investing activities, we focus primarily on long-term asset accounts. What has the business invested in? And generally, those transactions are reflected in our long-term asset accounts. And finally, for financing activities, how has the business financed its operation in terms of resources or funding? We focus on our long-term liability accounts or debt and on our equity accounts. Long-term liabilities would show us where we have gotten money that has been borrowed, and our equity accounts would basically show us where we have gotten money from owners. In terms of the number of ways that we can prepare the statement of cash flows, there are two basic methods that can be used to prepare the statement. One is the direct method, and the other is called the indirect method. And I think it's important to understand that both methods, regardless of whether we use direct method or indirect method, they will yield the same totals. Okay, the totals on the statement won't change. It's just the presentation, basically the presentation of our cash inflows and outflows from operating activities that will look different based on whether we are using the direct method or the indirect method to prepare our statement of cash flows. And so what I have down here is, it says show different presentation for operating activities. The presentation for investing activities and for financing activities is exactly the same for both the direct method and the indirect method for preparing the statement of cash flows. And with that as an introduction, the next topic will be working through one of the problems out of the textbook, preparing a statement of cash flows. And so at this point in time, I will stop this lesson and we'll continue on in a few minutes. Thank you.